You're watching us here on a very special episode of The Weekender on CNBC-TV18. Now, in case you haven't figured out already, this one has something to do with coconuts. And what in FMCG is coconuts? It is, of course, Marico. So we'll be speaking with the MD CEO, Saugata Gupta. And Saugata, the last time he spoke to us, he gave us a 10,000 crore revenue target and 500 crores in food as well. 5 years later, he's met those. So let's see what he promises us today. Hey, Saugata, what are you looking at here?
These are some of our great products.
These are some of your great products. So, I remember the last time we met, had a conversation like this. This was about 5 years ago, just at the end of demonetization before GST. You had then told me that 5 years from now, Mangalam, we're looking at revenues of 10,000 crores and we're looking at food business of roughly 500 crores. How spot on were you? So what are you going to tell me today?
Well, we'll talk about the Marico of the future 5 years from now.
Are we looking at 20,000 crores?
See, I think it's important to grow, but I think what is most important is to have a portfolio for the future. If you see the last couple of years, especially post-COVID 2020, we have had an amazing diversification story. Right. And I think this diversification will set it up for long-term, profitable, sustainable growth in the future.
It's safe to say the last 5 years have seen more disruption than the previous 30 years. We had the demonetization, GST, then the pandemic, all these things. What have they taught you?
So I think the biggest thing is a leader or organization's ability to anticipate an issue. Earlier we used to do a 5 years, a 10-year plan. Today it's about actually doing an annual plan with 3 options. I think therefore the way of looking at it. The second thing is ultimately in adversity, people are most critical. If we look at COVID, one of the first things we said that it's people first, business can come next and profit last. Ultimately, people make a difference. And therefore, today, we have a set of leaders who are far more caring, far more empathetic. The third thing, I think what is important is the entire last 5 years is the role of digital and automation. If you look at digital today, and I think COVID provided the kind of an accelerator. What could have happened in 3-4 years got compressed in maybe 12 months. Okay. And lastly, I would say the ways of working. Life has become much more simple. We are much more comfortable. You don't take a morning-evening flight for 1 meetings across. Yes. You can do through video conferencing. So I think that has been the other change. The fact that today you can operate in a remote environment with a lot of trust and a lot of empowerment to people.
You spoke about you wanting to be in the top quartile of innovation, top quartile of digital analytics. How do you think you fared?
Now, I think one of the biggest things about Marico has been successful is because of they have been punching above our weight. And therefore, we have been able to maintain what I call our founder's mentality, owner's mindset. And therefore, we are not a complete incumbent. We are something I call a scaled insurgent or an insurgent incumbent, we call it. And therefore, our ability to create an engine 2, as we call it, house some of the digital brands there. For example, Beardo still operates out of Ahmedabad, Just Herbs operates out of Chandigarh. We haven't integrated into the system. We look at capital allocation, we look at portfolio, we look at reputation and quality and risk management. The rest is up to the founders or the CEO who runs it. So therefore, I think we realized that we need to have an alternate business model to drive that. Simultaneously, we invested in analytics and everything. So I believe we are not the best in the world at all in creating digital brands from 0 to 100 crores. But when it comes to 100 to 500 crores scale up and profitable scale up, we would be one of the better companies and top quartile. And we are the go-to strategic investor for these kind of brands.
When you spoke about 100 to 500, it's only poetic that we've come here where all your food products are. You have the Fitify range, you have peanut butter, I can see some mayo. Food business has grown extremely well. It's closer to 600 crores. You want it to be 850 to 1,000 crores in the next couple of years or so. I just want to understand that where does your right to win lie in those categories? Because there are a lot of other players which are perhaps offering better products there.
The entire approach has been that Saffola has been an under-leveraged brand. Can I use this brand to expand the total addressable market? And therefore, if I look at it, we have 4 or 5 platforms. One is breakfast and in-between meals healthy snacking, where Oats or Munchies operates. There is what I call spreads, which is again, we are offering healthier spreads, like for example, a peanut butter has jaggery, a mayonnaise has low fat. We have immunity as a platform, which we actually started off in COVID as a tactical opportunity. We seem to be doing honey quite well. The last platform is about plant protein. Again, plant protein, I believe, is a category of the future. We are targeting consumers who believe in a healthier way of living, healthier way of life, and Saffola is offering a better for you solution in that.
But isn't that what a lot of other players are doing as well? Perhaps not at a portfolio level, but at a product level. How do you then, as Saffola, compete with those who specialize in those particular products?
So if you look at it, I think, let's be clear that if I have, say, 1 million households today in masala oats and oats, and today they are looking for these kind of solutions, I think a Saffola household is already wedded to the Saffola brand in terms of our ability to offer solutions. Now, a brand like a masala oats is available in 200,000 outlets. And therefore, when it comes to honey, soya, which are much more mass advertised, or snacks tomorrow, we will go into these set of outlets. We are not getting into, say, and Pan Plus outlets. So we are not going to compete in the impulse segment. So I believe that in terms of the go-to market, in terms of our cost structure, in terms of our ability to cross-sell to these set of consumers, we have a significant right to win. And if you look at the equity of Saffola on health and healthy living, and I think it's one of the most powerful brands which we have.
How much of Saffola do you consume per day?
I think I use a lot of our products.
You're also eyeing profitability. If you can throw light on that.
Let me tell you, the entire foods portfolio makes much more margin than Saffola edible oil. Okay. So that way it is, over the portfolio, it is accretive. Okay. Secondly, I think if I look at foods, it is important to scale up quickly. So therefore, I believe that in another 1-2 years, honey, soya will scale up 100 crores plus. Once you do that, and therefore our entire focus is to get 4-5 categories into the 100 crore opportunity and then to 200 and build a profitable model with that. So therefore, both we are aware that in both food and digital, we have to, and this is one of the focus areas this year, that how do I drive profitability in foods and a digital business.
All right, and before we move on, I see some skin moisturizers as well out there. Are there any categories that you think that you have some more opportunity in? Skincare is one of them. The other one I would presume is wash. You aren't present there.
So I think it's important to anything which we enter, we would like to enter with a differentiated offering, and therefore where we have a right to win. Now, if I look at some of the categories, in India we have experimented and successfully experimented with expanding the total addressable market in Saffola in foods. In a country like Bangladesh, where we have launched shampoo, we have launched baby, we have successfully experimented with expanding the total addressable market using Parachute Advanced. Okay. So therefore, yes, I think there are opportunities. Having said that, I think our existing categories have significant headroom for growth. I think we have identified food, digital and premium personal care, which is currently we have some skin and serums and male grooming. And that part of the business has to grow 20% every year, 15 to 20% for us to think about a kind of a double-digit revenue growth. In the next 5 years, we will have what I call a portfolio of the future, which has far more headroom for growth, and of course, in categories which are lower penetration and ability to win both through penetration and market share.
All right, on that note, what we'll do is just walk around there, have a cup of coffee and a conversation.
Sure.